And that sound means we are now live here on our YouTube channel. Our halftime report is our daily show where we go through the markets one step at a time, analyze the charts, the news, the economics, any information we feel is important, kind of break it all down and give you guys our insights so you can better run your daily routine. Veterans, you know what to do as you're popping into the show. Hashtag Team Tackle is always our official hashtag, gets the energy flowing right out the gate. Love watching that chat throughout the show and the way that you guys are engaging each other. It's really, really cool to see. If you're brand new to our channel, first time you're watching us, click subscribe, click the bell, come back and join us on a daily basis. We go live whenever the markets are live, 12:30 p.m. Eastern Standard Time. Today, we are starting a little bit more of an earnings roundup. We got a bunch of names that we're going to digest, going to take a look at. Johnson & Johnson, American Express, D.R. Horton, Verizon, just to name a few of them. We've got technicals we've got to read on the market, but quite frankly, the markets are kind of sleepy in that regard. There's different pockets of stories developing here, there, or somewhere else. And we do start our two-day FOMC meeting as well. We're going to analyze it all. We've got a full panel here today. Matt is doing analysis here, running the screens and charts. Matt, you first. How you doing, sir?
Doing fantastic, Tim. Excited to be here with the crew to break down the market here today.
And our guest, Queen Emily from Women in Trading. And I do believe we have a Women in Trading mastermind group on Friday night as well this week. Emily, how are you doing today?
I am doing wonderful. We had a little bit of snow last night here in Washington, D.C. Nothing too big or crazy, but it's always good to see some powder on the ground. So I'm doing great.
Snow, we get snow a lot, and we've been having it here as well recently. I believe you just made me think of a story, though. Matt got stuck in a snowstorm in DC once with about 2 feet of snow, and he couldn't get his plane back. Yeah, something like that.
It was not 2 feet. It was, I think we got 36 inches overnight.
Like, wild.
I actually remember that weekend. It was right around this time, actually, about 5 years ago. We just got the Facebook reminders.
Oh yeah, it was right around this time frame, third week January. I'm hanging out with DC with Steve Andrus, Bo Moody, having a great time. We got 50 people in the room. Day 3, we're hanging out. Snowstorm hit overnight, 36 inches dumped. We had 6 people that all stayed in the hotel with us, and we hung out for the next 3 days before we could get a flight out of DC. And it was a ghost town. I probably was a little bit of Jack Nicholson from The Shining in that hotel in a couple of those days. It was fun time. It was fun time. We made a game of it. It was good. Good time had by all.
Yeah. We got 1 inch, so not 36 inches here in Salt Lake City overnight. So nowhere near any of this kind of drama or whatnot. But I like the snow. I got no problem with the snow, although I am tired of the cold these days. I got to tell you that. I got to move somewhere warm. Mark, how are you doing today, sir?
I'm doing good, right? Look at that chart trading sideways. Give me that chart every day the rest of my life, and I will live in a cash flow paradise.
It's your go-to with everything. I understand. I love cash flow as well. Do you just love dojis? Are they like your favorite day in the market? When you wake up and it's a doji and there's nothing going on.
Only if it's a gravestone doji, so it can
listen, I love up days. I love that. I love this trend, right? This last 3 months has been amazing, because it's provided good directional opportunities in different areas. It's provided good cash flow. It doesn't matter unless you're short on GameStop, right? You're pretty happy with this market the last 3
months. That story isn't over yet.
It is not. I don't think the final chapter has been written on that one. It's going to be interesting.
Before we put any gravestones down on anybody, let's give that one some time.
Yeah. Let's talk charts. Let's go through this. Let's analyze it, Matt.
Mark's not wrong on the market, though. This is turning into a little bit of a stock picker's market, and it has been in recent. Like when themes emerge, the market's all going to trend together. But every time earnings season kind of happens, we start getting into a little bit of a stock picker's market, and definitely with what is happening with Wall Street bets and the underbelly of the market, and That's where the playtime and the gambling and the speculation and the dirtiness. Think about the underbelly of the internet. That's kind of like the underbelly of the market right now. Just some fun, some dirty, some good times, some scary. That's the underbelly, but it really just is the underbelly. The broad markets are just in this fade action, the broader markets, and it really has a very specific pattern that has not been great for directional traders that have enjoyed the market kind of simultaneously moving in the same direction. But Mark is accurate for those cash flow investors, the individuals that love covered calls, the individuals that love naked puts, the individuals that love credit spreads, bull puts, bear calls, those types of systems out there. You know, this little break and fade action the market's been going on over the last month and a half, 2 months. I mean, that's been very consistent. It's been very good for, you know, the cash flow investors, and the directional traders have certainly participated in there, but not as much as when we get these types of blow off tops and these types of good little trends and these types of, you know, momentum post election. Those themes that emerge really cause a good directional trading environment. When you're looking at this market over the course of the last, you know, month and a half or so, you got a very interesting pattern. It breaks, it fades, it breaks, it fades, it breaks, it fades. And that's what we're seeing. We're seeing legitimate breakouts. We're not really seeing follow through here. And sometimes when you're looking at the market and you're like, wow, you're seeing this great follow through. Well, a lot of times it's on the backs of a news event. And we have not been light on those news events, right? You've had talk of stimulus, you have an FOMC event, you've had earnings season, you've had, you know, Biden's first 100 days, you've had rollout of distribution of vaccine plans, you've had potential catalyst to continue to drive the market, but it hasn't sparked that fire to really kind of, you know, get that market moving. And so you just have this fade, this break and fade, break and fade, break and fade. And, you know, it's kind of lulling you to sleep to a certain extent, but it's a really, really good thing. It's a good thing, and it's a natural market cycle, and we're getting back to normalcy. You're seeing, you know, stock pickers market in certain areas of the market. You're seeing sector analysis in other areas of the market, and I kind of feel like this is the perfect market for that fits the widest demographic of market participants that I've ever been a part of, quite frankly, and it's a fascinating market to be a part of.
Emily, I want to bring you in here next.
Let me put it like this, Tim. Easiest way, and then bring it in. It's got 31 flavors. It's got something for everybody.
If you're a cash flow trader, you can find them. If you're a directional trader, you can find them. If you're a day trader, there's enough volatility. If you want to play volatility, it's there. Yeah, it is a 31 flavors market right now. Emily, how are you enjoying some of those flavors? Are you, you know, playing the cash flow? Are you approaching the direction? Are you doing a little bit of everything? Like, what did you read on the market conditions?
I'm on Team Mark. This is just cash flow, you know, situations for me, especially when we have, you know, earnings coming out, and so many stocks that I, you know, typically trade are having earnings this week. So really nothing much that I'm getting involved in terms of getting into anything new. So it's whatever trades I currently have on, it's just cash flowing and making those adjustments and bringing in more cash flow. It's really, you know, what we love when we talk about, you know, cash flow. Like, you know, the last, you know, 3-4 months where we had the market just ripping, and, you know, even though we were doing cash flow strategies like covered calls, you're just worrying about, you know, calls getting taken, your stocks getting taken away, and you're, you know, adjusting and doing all these things. But now it's like, you know, you can just relax and chill and not have to worry about, you know, the market ripping and all that stuff. So it's pretty cool.
You know, since about mid-November, it's been a very, very beautiful trend in that regard, Matt. You're right. Breakouts aren't necessarily running or anything, but they aren't obviously selling down too hard on these consolidations either.
But I mean, you haven't yet to break a support level, a key support level in months. And so, yeah, you're not getting the massive price appreciation that we saw post-election, but everybody and their dog thought that momentum was going to slow. That type of momentum you see, that cannot be sustained. It's going to slow down. It's just a matter of, is it going to trigger sell-offs? It's tried multiple times, and every time got met with support bounces. So, you know, yeah, it's a little bit of a boring market in that regard, that we don't have a lot of aggressive price appreciation here, but it's been a very consistent trend. It's been a very consistent pattern in the market. I think the support bounces are something you can trust. The buy the dip mentality is still very strong out there. And quite frankly, I mean, when I say this, it's got 31 flavors, I mean it.
It really does.
If you're the type of trader that needs the aggressive directional volatility, that likes to chase momentum, you got an underbelly of the market that is fascinating right now. And yeah, GameStop's getting all the, and maybe, when I'm talking, sometimes it's hard to track on the thing, but GameStop's getting all the write-ups and all the love and the wordage and the searching online, because GameStop's the latest Wall Street bets candidate, and it's the latest stock that they're trying to drive out short sellers, and that whole story is just absolutely fascinating. But you can certainly participate in this. But this type of volatility, we're not seeing this in the broad market, guys. Not in any capacity.
No.
We're not seeing what's happening in KOSS. We're not seeing what's happening in AMC. We're not seeing what's happening in Bed Bath & Beyond. We're not seeing what's happening in GameStop, or pick your Wall Street bet candidate that has a high short float. We're not seeing this type of lunacy and craziness in the broad markets. You're actually seeing something fairly consistent in the broad markets. And so when the underbelly of the market, which only represents about 5% of the entire market, but right now represents about 16% of the trading activity, yes, it's going to be out there in the news more so than other information out there. But once again, that gambler's market, it is a pure speculative gambler's market out there. The underbelly, once again, that gambler's market is not representative of the entire broad market. You have these massive areas that M loves trading, Mark loves trading, that is in net neutrality, stagnation, where they're writing covered calls against it. Then you have your volatility traders that are, enjoying earnings season. And then you have your standard directional traders that are just hating earnings because they always hate earnings. And they're just saying, I can't wait till earnings is over. This market is 31 flavors. It's something for everything. It is getting into that stock pickers market. And that's more of a natural, normal market, in my opinion. So yeah, the craziness in the underbelly is being represented a little bit too much right now, just because it's what everybody's talking about. Because quite frankly, the Fed this week isn't going to do anything, and it's boring out there. So it's taken on a little bit more of the social conscious. It's out there in the media a little bit more, but quite frankly, it doesn't reflect and doesn't have that much to do with the normal market activity on a daily basis.
Mm-hmm. Mm-hmm. Well, and as I'm looking at the indexes, by the way, which have all that balance in there, the different sectors, I don't see much difference between any of them. And these different areas of the market you guys are talking about create opportunities, like But here's the bottom line: indexes are just kind of doing their thing. The S&P's chugging along, the NASDAQ's chugging along.
Okay, and very quickly before it starts getting craziness in chat, I see the same names you guys are about ex-billionaire hedge fund buying out of the money call options on GameStop. Guys, they're buying out of the money call options with 0.000000001% of their portfolio. That's number one. Number two, they're day trading. That's what they're doing. And so if you're coming to a company like GameStop based on what is happening in Wall Street bets, you need to be day trading, and that is it. These individuals are not swing trading. Once that day trading party's over, the party in general is over, and you do not want to be the person holding the bag.
Yeah, it's like a billionaire when he does that. It's like me buying a McRib meal, right?
Yeah, come on. Don't use some ex person as your justification for buying an out of the money call option when you know damn well you shouldn't do it.
No, it's like, if I buy a McRib meal, it's not going to impact my financial future, right? So listen, it's fun to watch. It's
It's a popcorn chart, sure. I agree.
Fascinating.
It is fascinating. And the headlines are fascinating. I mean, they even pulled me in, I got to tell you guys. I mean, I saw that some hedge fund giants were injecting capital into another short sellers fund to try to keep them liquid from, capitulating and all that kind of stuff. You read this and it's like, okay, this is entertainment. But I haven't taken a single trade on GameStop, and I'm not interested in taking any trades on these kind of companies right here at all. There's just so many
carry overnight, I can tell you that.
I mean, if people are day trading, and if you're an experienced day trader, I get it. But let me make a very, very important point. These call options are so extremely priced right now. It's insane to even think about paying the cost of the value of these options.
You got to trade equity here.
I just do not understand the option thing all the time. There are times if you're going to dip your toe into some crazy waters where the equity is a cleaner and better play.
Well, the way I've always seen it is what's happening on Wall Street bets. The same thing we've seen in our many times in our career. People want to get a hot tip. Crowd mentality takes over. Herd mentality happens. You see some pop and run. This is a story that's not a new story. It's just this time it's different, right? But the reality is this party is going to end on GameStop, and that herd mentality is going to go to the next target. And what happens when all the day traders move on from GameStop and they're sick of, this, and now we're talking about AMC. You don't want to be the back holder here. So day trading, fine. I think you stay with equity. And quite frankly, if you're going to Wall Street Bets, that subreddit on Reddit every day, and you're getting trade ideas, there's nothing wrong with that. We all get trade ideas in a lot of different ways. But again, never, ever adjust your system to meet the philosophy of what somebody else is saying online.
And don't,
because if you actually read those stories from Wall Street Bets, most of them are horror stories where they simply didn't understand some concept of margin or leverage, and they lost a lot of their money and somebody else's money too. So for all the good stories we see on Wall Street Bets, there's 10 pretty bad horror stories.
Yeah. And those horror stories need to be highlighted more, in my personal opinion. We don't necessarily need to do that in our show, but guys,
no, we don't need to do that on our show.
There's a lot of people out there that get swept up in this stuff. They don't have education. They don't know how to read a chart, and it's just gambling. And you don't want to be that type of trader because it's not sustainable long term.
And at Tackle Trend, we cheer on the consumer. We always cheer on people making money, but you just got to realize the pen you're playing in.
Yeah.
It's a day trader's pen, and that's what should happen there.
Mm-hmm. Mm-hmm. Matty, flash through the indexes real quick. Won't take long. There's dojis on everything, but just tell me
if you want to see different types of dojis, yeah, I can give that, because we do have different classifications of dojis.
Are these different dojis?
Well, okay. Let's see if we can identify any dojis. I could go morning star, evening star. It is in high base that touched on support. I mean, I go either one. Morning star, evening star. Which one do you want to go with?
Just doji.
All right, doji. Same concept.
Doji. Yeah.
Okay. Let's go Russell. Little spinner. Got a little spinner.
Spinning top doji.
Little spinner. Little spinning action. Same read.
Mm-hmm.
But it is a spinner. I like the spinner. Let's see if we got. We may have something.
No.
No. No, I mean, I tried, bro. I tried. No.
I enjoyed that.
I tried.
Yeah.
The classification of dojis.
Name that doji.
I felt like Steve Nissen there for a second.
That's inside baseball.
That was not a positive. That was not a positive thing, by the way.
You know, it's interesting here. There's not much going on across the different indexes.
Oh, GME got halted again. Oh man, that is like a daily occurrence, James. GME
it just ran like 12% while we were talking. So
yeah, bro, truth. I saw a couple stories last night. Because I got my. I think I'm the same way as a lot of people with WSB right now. Like it's not a party I want to play with, but I'm very interested in it. Like from an entertainment perspective.
Yeah.
And so I went there, bro. I went there to the subreddit. I read some of the stories and I researched a little bit. Just I don't even want to say the word research because that does not give the word research justice. I did some Googling. is what I did. And you know, for every good story, and there are some good stories, some successful trading stories out there. But for every good one, I read just one. You just don't. One of those moments you don't even admit to your wife, or you get divorced. Those types of stories.
Mm-hmm. Like I read some horror stories myself.
Like
and,
Emily would leave Mark type story.
Well, now I'm intrigued.
Hey, what's up, Emily? I just bought 4,000 out of the money calls on Riot. How you doing?
Oh goodness.
No, I prefer the market sells naked puts on AMC at $2, not the Riot.
Yeah, listen, you know, if you want some GameStop action and buy a McRib meal and you just can't help, go out to April, go to the $4 naked put, and you can get $16 bucks.
Not doing it. No, I'm not showing people that. No.
Well, you can't right now because it's halted.
Yes, I wonder if it wasn't halted. No,
Yeah.
you shouldn't sell a naked put on
You
GameStop.
think about that.
No.
$115 stock that you can get a reasonable rate of return on the $4 naked put.
And yet $4 isn't even fair value for GameStop.
You know, and so, I mean, that just shows you that, listen, market makers are like, this can go a lot of ways. We're pricing in as far down as $4.
I don't know, guys. I just don't feel the best way to approach what Wall Street Bets is doing is in the options market. That volatility scale is just ridiculous, and it's hard to. It's beyond. I mean, you're paying beyond a VIG right now, guys.
Well, and who knows
You're paying
about fail
beyond
rates?
a VIG right now. So, yeah, I think the best way to play it is equity here, and I think that's what most people in Wall Street Bets is doing. Yeah, I know the options are popular there too, but commission-free trading has really increased some of this. And so I think the equity, if you're going to participate in those high flyers, you know, yeah, deep out of the money calls before this type of movement, that's a different philosophy. But with this type of volatility we're seeing today and over the last couple of days, I think straight equity is the best way to play these types of momentum flyers that are targets of the Wall Street Bet versus hedge fund community.
Mm-hmm. Mm-hmm. Yeah, I mean, the thing about the options market is the spreads are widening. They're very illiquid. I know there's a lot of action there, but who knows what you're going to get your fill on the way out.
By the way, before anybody rips on Wall Street Bets, because you can a little bit, I get it. And the traditionalists and the veterans in us always, you know, it's just a tendency to kind of make fun of what's happening over there with Wall Street Bets. But realize the thing that Wall Street Bets is doing is very similar to what Wall Street has been doing for decades. Herd mentality, chasing the dragons on the same stocks. And, you know, I don't listen to Kramer, and I didn't even hear Kramer say this today. Tim, you're the one who told me Kramer said this today. But Kramer gave some advice to the short sellers, and it's the same advice that I feel is appropriate as well. How can you criticize a community for piling into the same stocks from a long position when you've done the same thing on the short side of the equation?
Yeah.
And so let's not criticize too much here, because, and again, this might be a Wall Street versus Main Street type scenario, but again, they're doing the same thing. They're just piling onto opposite sides of the same coin. So, like, I don't have a problem at all with what is happening. I just don't want to participate that much in it.
I got no problem with veterans using it for ideas or day trading or all the different things that you've said here. The one problem I have, and I guess it's just the empath in me, new traders who don't have education in the market getting pulled in, swept into something that can give them a bad experience when they're new. I mean, that just tugs.
And that is the thing when we talk as, you know, as a team, that's the thing we're most concerned about. I mean, Matt, you saw some of these like horror stories of people that didn't know what they were doing. You know, I see this stuff every day when I'm going to message boards where people like, what am I supposed to do now? I just did what you guys were doing and I'm now down thousands and thousands of dollars, and you can hear the panic in their thing because they don't know what they're doing.
Yeah, and let's make sure when anybody's listening to this, when Mark says you guys, he's not talking tackle trading here. Tackle trading does not get caught up in the underbelly that much.
And the people on the message boards talking to the other people on the message boards like, you guys did this. Listen, we just don't want our community. You can make so much money in your life in trading.
Yeah.
You know, why the incessant need to make it all today, I don't get. And I don't think that's
guys, how many fads have we seen in the last year simply because retail is now involved at a higher level than historically they have?
How about Hertz? Remember that?
Just thinking
the bankruptcies.
Yeah, remember Genius Brands? Remember that one? I mean, you see these things for a few weeks, it's like, oh my gosh. And then,
but it doesn't last.
And it never lasts.
That's the thing. And that's when we're talking about being the backholder. Yeah, when you're in it, it's fantastic. But like these people complaining on message boards, if you don't know their position size, if you don't know their portfolio design, if you don't know how this position fits within the design of what they do as an investor and a trader, if you don't understand their stop loss, if you don't understand their trade management system, if you don't understand how they're going to approach that from a targeting perspective, then all it is an idea that you need to do your own research on.
Yeah.
man.
And quite frankly, when anybody sees anybody else complaining on YouTube or Twitter or anything about you did this and it caused me to lose money, I'm sorry, but that responsibility and that ownership of that blame is yours and yours alone. You clicked the button, you made the trade, it's your money, you made the money, you lost the money, you can't blame anybody else.
Mm-hmm.
Have some self-responsibility. And so I feel bad for these stories, but these stories also start with the batshit lunacy of over-positioning, using leverage, and not respecting margin.
Mm-hmm. Yeah, the greed is grabbing people. There's no doubt about it. Yeah, I'm with you. Anybody else got any more thoughts on this before we move on?
No, I think we did. I think we had the conversation. We needed to have the conversation, but I mean, it's all over. I mean, when you're talking about what's happening with Wall Street bets, I mean, it's not GameStop is just the latest pick, right? But you're seeing things happening like this in the underbelly, like Bed Bath and Beyond, right? A lot of companies with really big short floats, like Bed Bath and Beyond, you're seeing the same type of volatility shift here. You're seeing the same type of price action when you're seeing AMC.
BlackBerry,
You talked about AMC and what's happening with AMC. BlackBerry was a little bit of a different beast, though. I mean, you're seeing the same type of volatility scale, but I'm not sure they're attacking it from a short selling perspective. I think BlackBerry was more of a, hey, this used to be a great company and it's got better valuation and maybe we can recreate the situation. I don't know. But you are seeing some of that too. So the underbelly, Mark, how would you define, very quickly before we move on, because I'm just curious more than anything else, how would you define the underbelly? Because yeah, Wall Street bets we would put in there and the stocks they're targeting, like like AMC and KOSS and GameStop, Bed Bath and Beyond.
All right, so underbelly, when I use the term underbelly, it is all your SPACs, first of all, almost all of your dollar stocks right now, a lot of your EV cheap companies. Tesla's its own beast,
but I would say the up and comers in EV, right, that are trying to attach themselves to the EV movement would be there. Yes, I would.
And then you have this handful of, there's about 30 or 40 of them, really popular culty type stocks. Palantir is one.
Palantir would be another one.
Headliners
similar to BlackBerry in that.
JMIA. I pull up some of these charts. JMIA. You got NNDM. It's a little 3D printing company. You got AQB, our salmon fish company, AQB. And so you have this entire area, and
what do these guys do?
They do salmon fish farming.
Okay.
So
it sounds like a company that needs to have 300% price appreciation.
I thought I heard
a fish company. Okay. Yeah.
No. And so
hey, hold on. I'm gonna go get my reel.
Here at Tackle Trading, we find the fish companies for you.
We find the fish companies.
Every once in a
blue moon.
I'm telling you right now, I'm going downtown Portland today, and I'm going to buy me some fish.
And so you got this entire group, and one of the commonalities of this group is, since stocks have enjoyed a nice 3 months since the election, right? The underbelly of the market has exploded since the November election. And so when people talk bubbles, we could debate broad market bubble, this bubble, that, but let's get out of the term bubble. Unsustainable price appreciation percentage wise, not saying that Aqua Bounty hasn't found the fish farming salmon cure, right? Not saying that they don't have a future for 30, 40 years. I have a naked put on this company, actually, that I sold a long time ago. But is 200% price appreciation, 250% price appreciation in a 3-month period sustainable? No. That's the big question. And the thing about it is in this run up since the election in these companies, I think on some companies you're going to see vicious sell-offs eventually. Some companies will continue to climb. Some companies will go into these broad consolidation ranges. But for the last 3 for the last, how many weeks? We're on week 13 of this since the election. This underbelly has exploded, and greed. I mean, this is where some of the greed is kicking in right now, is that there's been so much money made in this area. Small caps had a great run, right? So much money it made in this area that they're feeling very froggy. Let's push it more. Let's push it more. Let's push it more.
Mm-hmm.
The biggest question I have on anything here is how long does it last? Like how long does the volatility last on GameStop? Right? How can it last days? Can it last weeks? I think that's an open question that is very interesting to a lot of participants here. Is this something, and I don't believe it has legs, but does it have longer legs than, say, the bankruptcy trade, that the lunacy we saw over that?
Mm-hmm.
Well, I mean, you went back.
So I just have a question on it more than anything else, because I do see it as a day trading vehicle. But if it proves to have longer legs than that, maybe you can start to see something a little more deeper there. But I don't know. I think there's some open questions here more than anything.
I agree. I agree.
Well, you know, and you never know, right? Like when Tilray broke out, you know, Tilray is one of the most famous examples, because this lunacy, it's not new. It's just happening a lot more, right? The frequency is up. But when Tilray broke out of $35 back in a couple years ago, it was 21 days from breakout to peak, and then the sell-off was historic, right? I mean, it's something that we'll talk about. I mean, pull up that Tilray chart, TLRY. You know, and this is what, like, when we talk about bag holders, you're gonna have to go back a little bit further in time. When we talk about being the bag holder, we don't want. So one more year, I think.
You keep talking. I'll get there, bro.
Yeah, we don't. This is what we don't want anybody to be, right? So you have a run up that feels like it's never going to stop. Somebody buys the ticket 300, and then it drops down to like $100 in 2 days. I mean, the sell off, when you never know when the sell off is going to happen in a parabolic run, but when it happens, woo, it is fast, it is furious, and it is nasty.
Mm-hmm.
You know, and I just don't like. There's so many ways to make money consistently long term. I never want anyone to be the buy the tick at 300 or 270 or 260, and then all of a sudden their money gets cut in half. And heaven forbid if they're over leveraged on options, right?
Listen, I mean, the Tilray thing was historic. There's no question about it. But that's an example. And this isn't going to be the last time we see blow off tops or crazy examples in the market when these small companies just go parabolic, obviously. It will happen at different points in history. It will happen again in the future. Everything has happened before, and everything will happen again.
That is some Battlestar Galactica stuff right there.
That's exactly right. Let's move through the commodity market. Let's take a look at the rest of the market to keep breaking it down. I do want to get to some corporate earnings here in a little bit as well. Marky, you know, we had the conversation yesterday. Obviously, crude oil, gold, so many of these commodities are just kind of range bound and stuck in the mud. Maddie, let's take a look at crude light first. And Mark, I'll get your commentary on it. How are you approaching commodities? Probably not much difference from the last couple of weeks as they've been consolidating. Is it cash flow for you right now? What's your read on the commodity market?
Yeah, I mean, listen, I like cash flow on energy companies right now. Once again, a very small percentage of your portfolio. You know, so I got a little bitty on, you know, a couple energy companies cash flowing. I like oil stability, unless you see something on the virus where there's some mutation, something like that, you know, and you'll see that coming, and you'll see, you know, obviously if that ever happens and the market reacts, you'll see, you know, we'll be talking about it nonstop. But absent that, you know, scenario, everybody's pretty froggy on reasonable oil prices for a while. Now, you know, once again, after you have a big run, it's very normal in commodities to take some time off. You've been seeing that the last couple of weeks after that vaccine day from Pfizer, big, huge run, take some time off. That's very, very normal. So I wouldn't be surprised to
Well,
see some consolidation for a while.
yeah, and let me just say something about the technical movement that we're seeing in crude a little bit. Unlike the S&P, where it has a very specific pattern of breakout, consolidate, breakout, and consolidate, breakout, and consolidate, that's not what we're seeing in the crude trend. What we're seeing in the crude trend is consolidation, breakout, run, consolidation, breakout, run, consolidation, breakout, run, consolidation. Do the dance with me. Breakout, run.
Yeah.
And so you do have a specific trend and pattern here that directional traders will look at this 53.93, you just call it 54, this 54 handle, and saying, yeah, I'm not going to touch it within the 52 to 54 consolidation, but if it does break out of that 54, we're going to see the continuation of the same trend we saw last time: breakout, run, breakout, run, breakout, run. That has been very consistent in the crude chart over the course of this trend that developed after the reversal pattern over in this capacity from August throughout early November, with the final breakout of 42. So from this breakout of 42, that breakout pattern has been fairly consistent. So I do think the crude traders are just kind of in this lull, kind of in wait and see mode, waiting for that consolidation, waiting for that breakout. And if it doesn't do it, no harm, no foul. But I do think the traders are here. And I know many tackle traders are waiting for that too, waiting for that breakout of $54. Now, if they get that breakout of $54, let's go back to a little bit more time frame in the crude market very quickly. Let's just go back to 1 year. Let's see some of these breakout. Let me go back a little bit more time frame now. You know, we're in the recovery on crude. You got to go back a little bit more time frame to see those resistance pivots. The question you really have here on crude oil is if we do see that breakout of 54, where is that target? You do have quite a bit of historical data at 55, old resistance, old support multiple times, but that was in this net consolidation where you're going to find a lot of different support and resistance levels. There's a lot of chop between 55 and 65. And if you guys will remember, before all of this pandemic, oil was very specific. You buy it around 50 and you sell it around 65. That's what we did. And we did that for a year straight. It was in that wide range consolidation where you were looking to buy at 50. And I remember the analysis. It's like you always buy at 52. If it ever breaks 50, it's get out. It's get out. That's how strong that $50 mark was. Well, you saw a nice breakout of that $50 right here. It broke out. It ran on top of that. That's now going to act as a support level. You got multiple moving average now acting as support as well. So you got all your support. You got your trend and your pattern. You just got some chop as you fight to get to 60. But I do think 60 is a potential target on the breakout of 54. And I know that's a pretty big target for crude oil. But again, I just feel 60 kind of feels like it's in the cards. It's got a lot of historical price action between 60 and 65. So I do think this breakout of 54 can be traded. You got a lot of chop to the left of the chart, but 60 is not out of the realm here, both from a potential average yield perspective as well as just from a natural price action perspective.
Mm-hmm. Mm-hmm. Love the technical breakdown there. Obviously, a healthy development in this consolidations. Gold consolidation is a little bit different though, because it's much more stuck in the range, not in a trend. Let's take a peek at the metals market next. Dojis. Is this a different doji that we saw in the indexes earlier, Matt, or is this just another doji here on gold?
No, it's just a doji.
Just a doji.
Little spinner.
Stuck in the mud here for a couple weeks, guys. I mean, obviously, I think gold investors are fine with this. I have no problem with this at all. Is this the price action you wanted to see, Matt? Are you looking for something different? What do you want to see on gold?
Any narrow range candle here, you're not going to get a read on.
Mm-hmm.
You're just not. You're in that zone, and the zone is between 1800 and really the top end of the channel at 1900 is really kind of that zone. And so you got major support and major resistance areas. And so no, it's going to be a battle and it's going to take some time, but no, I don't think, let me put it like this. I don't think it does anybody any good to read a daily chart on gold right now, unless it's a big candle breaking something.
Mm-hmm. Mm-hmm.
Unless you're breaking something, it's just,
Think about that.
boring.
we got a range between 1800 and 1900. We're at 1852
Well,
on the doji
and
next to 5 moving averages.
Well, and that's not the technical range. That's the range I have in where this neutrality would be. And so, for example, even if you break out the 20-day moving average, yeah, you would say that short term, that would be a positive thing. But again, breakouts have not been, I don't even think it needs to be said on gold right now, but breakouts haven't been legit on gold. They just haven't. We need to see a breakout and a legitimate retracement before we start talking reversal and start talking pinpoint accuracy here. We got that. We got the breakout. We had everything we needed right here. That retracement failed. At this point, you need a breakout followed by a legitimate retracement. You need time. And so, no, I don't think we should overreact to a very narrow body candle in between a cluster of moving averages. No, it's just boring.
Quickly, the dollar, then Bitcoin. I want to get into company news. There's more important company news from earnings perspective at different charts I want to look at than these right now. First day of a 2-day FOMC meeting. We'll have much more to say about this tomorrow and Thursday once we get the the conference call and the reaction and all that kind of stuff. Matt, heading into the meeting, nobody in the market expects anything, pretty much. Are you on that same page,
Let me I'll read you what I wrote down in my own notes regarding the FOMC meeting that started today and ends tomorrow. The FOMC starts a 2-day meeting, which may be the least anticipated FOMC meeting in the past 12 years. The markets are not expecting much after the coronation of Janet Yellen yesterday in the Senate. And I purposely used the word coronation instead of confirmation.
Yeah, there's not much.
Not much.
There's just not much going on.
This is Janet's party. This isn't J Powell's party any longer.
She's earned a party, new Treasury Secretary, coronated. Definitely she's going to take that banner. Mark's been singing to her.
I love you.
She's earned a little bit of a party.
Listen, I love Janet Yellen. I mean, I just believe, like on one crew, all of these things that help support us as perpetual bulls, as perma bulls, Janet is going to play a key role in the next 4 years.
Well, and it's obvious that the fiscal side has taken over the monetary side from a relative importance to the actual market right now.
Oh, absolutely. In the short term, absolutely.
And we have not said that a lot in recent history, i.e. the last 12 years or so. It's been a Fed party from, 12 years till now. But over the course of the last 6 months, I mean, how many times, Mark, has J Powell scream in a mic somewhere, please take the pressure off me, fiscal?
Literally, and I'm not using hyperbole here, at least 25 times.
At least 25 times. So I don't think there's a happier person in the world than J Powell. Number one, he kind of created a lot of this lunacy we're seeing in the underbelly of the market. Maybe he's cackling like the devil. I don't know. But he's happy as a pig and what, given the fact that the fiscal side of it has taken on the conversation here. So this is truly one of the least anticipated FOMC meetings I can remember.
And then lastly, from a skyline perspective, Bitcoin's not doing much. If you guys have something on crypto, that's great, but it's really just hesitating at support right now. Take a quick peek at the chart. Not much in there right now. Let's move into stock talk.
Hanging out.
Yeah, let's move into stock talk. And really, I mean, the thing about it is stock talk, when we're going through this, different phases in the market, different times in the market, we're going to focus more on earnings or more on sectors or more on rotation. It's really whatever's happening right now. And it is earnings season, guys. It's going to be a very busy week of earnings. In fact, we did our podcast yesterday on what is earnings and how earnings work. And we really deep dived into that. And if you haven't listened to the podcast yet, it is up on the website, tradingjustice.com. And Matt, you made a statement during the podcast that was interesting. Guys, if you want to learn about earnings reactions, come to the halftime report every day, because we do this each and every day. And that's what we're going to do right now. You've got 3 or 4, I believe, that caught your attention. Where are we starting here? Freeport Mac?
Let's start with, I've got some mixed data on Freeport, so I need to recheck my FCX data very quickly. So just give me a second. Yeah, but I do want to start with Freeport. Now, Tim, I got Freeport, I got a misprint on earnings here. It's not 48 cents. It should read 38 cents. And so that was not 48 cents. That's supposed to be 38 cents. All right, I got FCX coming in at 38 cents a share. And the reason I want to start with FCX today, There's bigger companies in the market that reported earnings today, and there's probably more important companies that reported earnings today. But like I said, coming into earnings, I'm going to focus on the stocks that I feel are the most important for our community, stocks that are in some of our lists, like the Tackle 25 or DSM or Dividend Fireworks. FCX is one of those plays that many in our community have been a part of. It's our number one copper play out there, and tackle trading has been all over FCX, not just in this run. FCX has been important to our community for a very, very, very long time. And so FCX, I wanted to start with FCX today because of just in my opinion, the relative importance specifically to our community. But in terms of FCX reports 38 cents a share versus the expectation of 39. So a slight miss on EPS numbers. Revenue came in slightly above at 4.5 billion versus the expectation at 4.3 billion. So a beat there as well. Revenue did increase 14.9% in year-over-year trading. And the question is, well, you came in line in EPS, you slight beat on revenue numbers. Revenue did come in at 15% year-over-year. That was increased. It's a lukewarm earnings report. So why is it down 6.5% today? Again, when you're looking at FCX, and we had this conversation, and I hope you guys listened to the podcast from yesterday, because we did have a very deep conversation on what is earnings, why is earnings important, what to look for in earnings. I did a little bit of a 15-minute, definition on all things earnings and the relevancy of earnings. So definitely check out that podcast from yesterday. But in terms of this, what you're really kind of seeing here, in my opinion, is one of those moments where you had a lukewarm earnings report, but you had a little bit of a negative reaction to a lukewarm. And what you always have to think about is this: how not on GameStop, GameStop's on everybody's mind here, including mine today, but on FCX, you're talking about a company that is up 57.93% in the last quarter. So you're talking about a company that has done amazing things in the last quarter, and when you're in the last year, it's up 120%, guys. So you're talking about massive growth. And when you're in that environment, similar to what we saw in specialty chemicals last week, similar to what we saw in some of the high-flying, financial stocks last week, like, Goldman Sachs up 40% on the quarter, had an amazing earnings report. And what happened? The market simply used that event to lock in profit. And what are they looking at now doing? Re-emerging, coming back into Goldman here. FCX, a very similar type of scenario. Now, technically a little bit different, but similar in terms of the price performance. I got this very simply as just a profit-taking session on the backs of a very lukewarm report that could not justify the 57% price appreciation it had in the last quarter. And when you have it as that, what you're looking at here is, where is FCX going to find that support level? And so you still, this earnings report, if you're an investor in FCX, this earnings report is not going to shake you off FCX at all. They came in line on EPS. They beat revenue. Revenue year over year was fine. Nothing really negative to see here on the raw numbers. And so you're not saying anything as an investor. You're just saying, as a trader, I like the report was fine. The company is fine. Overreaction to the earnings numbers. Where can this find support? And so I'm looking at dip mechanics here on FCX, and you know what? We never want to buy into the face of this type of downward movement in price. You don't want to be the first one to jump in and try to stop this type of, volume that has happened over the last 2 days. You want to see it slow down, and where that could happen is right into this 26 range right here. You see this old consolidation resistance at about 25.30. You got the 50-day period moving average slowly creeping up into that 26 level. So anything between that 25.30 and that 26 level is where you're looking at in dip mechanics here. Now the question is, what if it violates the 50? Well, if it violates the 50, I do think you have a little bit of a different scenario. So you're looking at this to hold that range right here. If we can get a doji, Give me a couple days, upward movement in price. We can see something. You can map this out where you see that slowing momentum candles in this range of support at around 26. So keep an eye on FCX. Today's not a good day. Kind of anticipated. Nobody should be surprised or shocked at the downward movement on FCX. Let's just see how it handles that support level from a dip mechanic type perspective. Let's move on to the housing sector in DH Horton here. DH Horton, one of the most popular companies in the housing space. And again, there's only 5 of them out there, right? Pulte, Lennar, KB Homes, Toll Brothers, DH Horton. They all look and feel fairly similar. Popularity wise, I would say DH Horton and Toll Brothers above the rest of them at tackle trading. We typically do have a housing stock on our tackle 25. Last year it was, Toll Brothers or DH Horton. The year before that it was Toll Brothers. This year it was Toll Brothers. And so DH and Toll Brothers kind of do this little mix and match on the tackle 25. One of the better stocks in the housing space is DH Horton here. DH Horton had a really good last couple weeks coming out of this neutrality that the housing was doing. Housing itself has on the backs of a couple good economic reports over the last couple weeks as well. DH Horton comes in at $2.14 a share versus the expectation of $1.72. So a nice little beat on EPS numbers. Revenue came in above line at 5.9 billion versus expectation of 5.6. We also saw an increase in guidance and year-over-year revenue. Think about this number for a second, guys. Year-over-year revenue at 47.6% increase. This is a housing stock. This is a residential housing stock. Great numbers coming out of DH Horton here today. You got to like what happened on EPS. You got to like what happened on revenue year over year, and you got to love the increase in guidance. A little bit of profit taking here today. Tested up on the gap, came down with the profit taking. You are overextended in the short term, fighting on a resistance breakout right there at $80. Look for this to consolidate. Whereas we're looking at dip mechanics right now in FCX, we're looking at consolidation right underneath this breakout channel at 80. Looking at this on a weekly chart, you can see what I'm talking about. Look at this wide range consolidation. Give us some consolidation at the top end of the channel. Look for a breakout later on as we get on the back half of some of those other housing earnings reports. But you got to keep DH Horton on a watch list right now, in my opinion. That breakout of 80, a close above 80, could be something legitimate. Let's just give it some time in the cooker here on DH. Earnings numbers were absolutely fantastic out of DH Horton. However, let's move on to American Express very quickly. American Express, let's come down to that daily chart. American Express here showing a little bit of a gap mentality weakness, kind of a no-buy day here on American Express. Gap ran sold here. American Express comes in at $1.76 versus $1.26. Real good beat on EPS. Revenue in line at 9.4 versus a 9.4. Revenue did decrease, which is a kind of what we've seen in American Express. That did decrease yet again. Let me get the number right. 17.7% decrease in year-over-year revenue. Nothing really to see here on American Express. Whereas on DH Horton, you're looking at that potential breakout at $80 after some consolidation and time in the cooker. When you're looking at the first one on FCX, you're looking at dip mechanics. Here, you're in wide range neutrality after a failed breakout. This needs some time. I don't see anything on American Express happening in the very near future. 3M would be next. 3M company threatening a nice little breakout after a positive response to an earnings report that saw 3M come in at $2.38 a share versus the expectation of $2.19. Revenue came in at 8.6 versus the 8.5. Revenue did increase 5.8% year over year, and they maintained guidance, threatening the breakout of 80. Very similar to threatening the breakout on DH Horton. You're threatening that breakout out of consolidation on 3M as well. Look at this consolidation on that weekly chart. Look at the 178 to 180 handle here. You do have a lot of chop to the left of the chart, but not until you get into that 189 area. And so if you're looking at 3M, if this is on your watch list, You got the analysis above 180 to a minimum of 189, but nothing above 189. The problem with 3M and a $9 target on a $180 stock is GameStop moves $9 in 15 minutes. It's a big stock that doesn't move a lot, not a great swing trading stock here. So you like the breakout of 180, but as short-term traders go, there's probably better beast out there to put some money in. Next, let's go to Verizon here. Verizon, boring. I just know it's a cash flow trader at the bottom end of the channel. Want to get Mark's take it on a stock like Verizon at the bottom end of the channel here. Verizon comes in at $1.21 versus $1.16, 34.7 versus 34.4. Revenue came in at 0.2% year over year decline, and they maintain guidance. It does not get more boring than what Verizon just did, but it's Verizon. It pays a 5% dividend. It should be boring. It was boring. The price action is not boring, though. Down 3.3% on a lukewarm earnings report, threatening a short-term violation of support. But you're starting to get into that Coca-Cola, AT&T mechanics where you're like, cheap, value-based, dividend-paying company in a wide-range channel. Mark, you have any interest on selling naked puts in the 54 range?
I like the 5250 March.
You like it a little deeper than that?
Yeah, I mean that's what I mean. And once again, I might be in I've done this with Verizon for a while now. That like when it gets down, I would love to own Verizon in the low 50s, and so I mean, I kind of might be like targeted in and have my own internal price that I'm willing to pay. So, like 5250, I think you get about $40.
It's just
or so.
like some of these stocks like AT&T, Verizon, like these heavy dividend payer value stocks, boring upon boring. Think Warren Buffett type stocks, right? Traditional Warren Buffett type stocks. I mean, they get into the bottom end of the channels, and that's when you start looking at acquisition,
I mean,
correct?
it's the same thing. It's Altria, it's Coca-Cola, it's Pfizer, it's Verizon. I mean, there's a rinse and repeat pattern where
you don't buy breakouts in value companies.
No, I mean, every once in a while they go on these prolonged sell-offs, right? And people are dumping and they sell off and they sell off. Eventually there is a point though, and listen, once it stops working, whatever new stuff is going on with AMC and GMC, this has worked for years and years and years and years and years. When certain companies get to certain price levels, people are like, oh, I'm going to take a shot. I'm going to add that dividend company. Verizon for me is the low 50s. I don't chase it higher. I look to get it, and I don't think I'm alone.
Well, like for years and years and years, and that was before
AT&T,
the pandemic.
AT&T
AT&T would be another example, right? For years, it was like if AT&T ever got into the $30 range, you start acquisition, right? Now that's probably now around 27, 26, based on the current metrics, right?
Yeah, I mean, it's
Same
just,
thing
and
in
it's
Verizon.
just, you just learn to do the thing over and over and over. There's just a price point where dividend people come in and say, that's a really good yield. So,
and then the last one, and the gap out, let's see if it fills that gap, is Johnson & Johnson here. Johnson & Johnson comes in at $1.86 a share versus the expectation of $1.81. Revenue beat top line to $22.5 billion versus the expectation of $21.7. Revenue did increase right there at about 8.3% year over year. They did an increase in guidance by about 8% in their EPS range as well. And so you had a beat on EPS, a slight beat on revenue, increase in guidance, and they hinted towards further information coming soon on a vaccine near you.
Well, the increase in guidance and obviously the anticipation, all those things got the little pop on the stock there, and it's had a nice little trend. I think Cody actually talked a lot about this breakout a couple months ago. He's one of the
couple weeks. No, Trade Masters 3 weeks ago, 3 or 4 weeks ago. Yeah.
I know it's been on his radar. So, Maddie, awesome job doing the earnings breakdown. By the way, Microsoft's earnings are tonight. All of the companies you just mentioned don't pale in comparison to the importance of a Microsoft here tonight.
Nope. Talk about that front running. Called it last week after Netflix, Tim. I said they're going to be front running these big names, and they are front running the big names. They're not only front running the big names, they're breaking Microsoft out of that 230 range, saying, you know what, we don't care. 230.
No, I mean, Microsoft is going to be.
Come on, guys. All you had to do was stay under 230 and wait for the earnings report. You had one job, Wall Street, one job. Maintain 230 price action in front of Microsoft's earnings. One job. And your speculative nonsense can't stop one day and wait for earnings?
Nope.
My goodness.
Nope, it cannot. It needs to. Listen, Microsoft, this is going to be fascinating, right? Just from a how froggy is this market? Does it want to push big tech up in particular? You're going to know, because remember a couple earnings report on Microsoft, you saw the immediate sell-off, even though there was nothing in the report. Mm-hmm. It's going to be fascinating to see what the programs are right off the bat. And
there's going to be some things to look at in the 1 minute chart on Microsoft tonight.
Absolutely.
Mm-hmm. By the way, in the last 7 days, from January 19th till now, Microsoft's got front run from 213 to 233, ever so quietly, a little 9% run into the earnings report. So, yeah, front running's been there, Matt. There's no doubt about it. And yes, they did not want to wait for the breakout. They weren't going to give you that gift. They weren't going to be patient.
All it takes is one of those moments where that front running gets blasted, and then they stop front running.
Yeah, that's right.
What happens?
That's exactly right.
Thing, and if you guys think anything else is going to happen on WSB and GameStop, you're wrong. All it takes is one of it to have everybody lose their money, and they're like, "Oh, this is just gambling." Yeah, that's what you're doing. Yes.
Yeah, that's right.
Sometimes that little white ball comes on black, and sometimes it comes on red.
What about green?
No, okay. Why are you doing this? Why are you the way you are?
It hits green every now and then as well.
Why do we got to double zero this right now?
I'm silly. That's what it is. A couple of quick stock stories I did want to talk about here today. Let's start with Etsy. You guys are on Twitter, man. I know you were always on Twitter. Elon Musk, you said it earlier. I will agree with it. He could be a paid influencer. There's no
I don't know. Elon
it.
chose the wrong profession. He would get paid $1 billion to influence publicly traded companies. Like,
he would get paid so much.
Like, how much money would he get paid? Because we know what it meant to Etsy in the first hour of the trading day.
If given some of
$3 billion in market cap or something like that.
Sure.
The power of Elon's tweets right there. By the way, it's very early in the Elon tweet analysis, but fade the gap.
Fade that gap right there. It did not exactly hold because there's nothing
fade
fundamental
Elon's
about
tweet gap.
Him saying
fade the gap.
Kind of loves the company because he bought a gift for his
all
dog.
He did, he acted like somebody. he acted like a normal human being for a second, right?
Oh my God!
He came out
Elon
and
has
said,
a dog.
Hey, I bought some on Etsy, and everybody's like, Elon uses Etsy.
Yeah.
Oh my God. Hey, guess what? Elon probably uses Amazon too. Can we get some love in Amazon, guys? Can we get an Amazon front run breakout of 33.80? Can we do that too?
It's pretty funny, isn't it?
It's cute.
Is silly. Another one here, though, actually, not a merger, but a partnership that they're kind of trying to go into. Beyond Meat and PepsiCo. Mark, I don't know if you saw this. Beyond Meat is just a wild stock. It's been back and forth. It's starting to get some juice here recently. They actually announced that they're going to go into a strategic deal with Pepsi to form a joint venture, develop and sell snacks and beverages made from plant-based proteins. The stock is that you talked about fade the gap there, Matt. We'll get your technical read on this in a second. Mark, when you hear big deals like this, where you have a major company, $200 billion market cap Pepsi, established revenue, established marketing chains, all that kind of stuff, bringing in a newer company that has struggled in some of those areas, not necessarily perfect at it yet. Does it get you interested in the stock at all? I can't wrap my head around what to do with Beyond Meat. If anything, it feels like a complete stay away now that this gap is looking as ugly as it is. Mark, any read on this news?
Fun. I mean, I follow Beyond Meat nonstop. Beyond Meat has more headlines on it than probably any other stock. Walmart going into Brazil. They are a non-stop string of algo headline pushers. Listen, it's a serious good. When you get deals with Walmart and Pepsi, this doesn't hurt. right?
I was gonna
Fund
say
stock.
this isn't exactly like a GameStop is now have a
Mhm.
partnership with Microsoft headline.
Yeah.
I mean, at least
So
this headline's legitimate.
Oh yeah, no, there's interest in the business part beside of this one for sure.
I mean,
Yeah.
it's just, I mean, from a fundamental perspective, I mean, I've been out for a long, long time. I mean, so, but it's 2021, right?
I don't feel it does anybody good to chase 20% price movements.
Mm-mm.
And I know I'm saying that even with GameStop in the social conscious right now, but I just don't. I don't feel it does anybody good to chase things. But I will say that this deal, I feel it's a good deal for both companies.
Yeah, and Beyond Meat will always be on my watch list because it seems like every 3 or 4 months there's a really good trade setup, right? Where it consolidates for a month or 2 or 3, and then breaks out of that consolidation. So I mean, and then the moves are huge. Now this one was a gap, and nothing you would have just missed this no matter what. You didn't have a setup heading into it. But it's a stock that I love having on the watch list just because it will take a month or 2 or 3 off, form consolidation, then break out. So I'll absolutely trade it. I won't invest in it.
Well, and didn't Beyond Meat need something like this coming out of a pandemic where they've really struggled in this environment?
Sure.
I mean, you're talking about a deal between two companies, which allows Pepsi to deepen its investment into plant-based food, and it allows Beyond Meat an opportunity to expand the 13% hold it has on alternative meat solutions. So I like the deal for Beyond Meat, and again, I don't think you should chase here on Beyond Meat, but I wouldn't fault anybody for getting on a watch list and wait to see some technical environment set up on Beyond Meat. This is a company that can absolutely fly when it wants to.
That's fair. I think that's exactly where my head is. Give it some time, let it develop, see how the price action chops for a while. Give me the next technical setup, and then I can
I
revisit.
don't think you chase this one. I think you wait for the next technical setup and you hit that one. But yeah, I do think you probably need to get on a watch list to see if we can see some development here.
I agree.
I think it's a positive. I think it's a positive acquisition from Pepsi, and I love it for Beyond Meat.
Two quick more, and then we're going to get into upgrade downgrades. I got a bunch of companies that did catch upgrades and downgrades today, and we're going to analyze those as a team. Play the little "Do you agree or do you disagree" game here in a bit. Mark,
what are we calling the upgrade downgrade game?
Is it agree disagree? I don't know if we have an official title for this. We rename these like every show, Emily. It feels like we come up with new ones. I liked the trash that makes cash name.
Trash for cash. Trash for cash. We like that one.
But we had a couple, like Wapner's Court, I think we had a couple ideas on this one, on the judge or jury type of thing. I'm not sure. We got to get an official name for it.
We could do a judge this, and the icon could be like the middle finger in the air.
Or the gavel. I don't know. Maybe we could keep it a little.
Judge this, Wall Street. Like a little bit of hold my beer. Judge this, Wall Street.
Yeah, sure. Mark, you brought up Moderna today. I think it was interesting. We don't talk about vaccine developments at all the time, but you brought it up in pre-production. Wanted to talk about the news a little bit. They just got a contract to deliver 30 million vaccines, I believe, to the federal government. And obviously vaccine distribution rollout the first 6 months of this year is going to be a constant conversation and theme. Mark, what was your take on Moderna and that news? mRNA?
Oh, no, I mean, it's nothing specific with Moderna. I mean, once again, a fun stock to trade if you get good setups. It can be a little harder to find those good setups, but it was just nice to see. They've gotten 30 million doses to the government. I mean, listen, it's a slow process getting the vaccine out, but it's there, right? They're chugging along. A few million doses here, 10 million doses here between them and Pfizer and other companies. They'll get them out. I mean, they'll get them out. It's amazing it really has happened as quickly as it has. And the process is there. And so I thought it was just a nice reminder that we are on the path of distribution.
And obviously got a little trend developing the last little bit as well. Twitter, last one, then we're going to play upgrade, downgrade. Twitter actually, they settled the two news items for them today. They settled a derivative lawsuit from some of their shareholders, which was a good thing. But they also acquired Review, which is a paid newsletter publishing editorial service where people who are content creators who want to get their content out there, they can actually create this. Twitter made the acquisition and the markets were liking it. Initial price reaction, Matt, was very strong. It's now giving some of it back intraday. Is there anything
initial price reaction in a lot of these stocks was very strong early though, and they've all kind of faded. So
Yeah.
it's a matter of seeing if they recover. I mean, when you're looking at that 30-minute chart, you're seeing that initial reaction, very strong, fade action coming down. Haven't really found a pattern and a support level from an intraday perspective. It tried to form a little bit of a retracement. That failed pretty quickly. And now it's just in kind of no man's land from an intraday perspective. So there's really nothing to see here on Twitter until you see something set up.
And now it's going to come up on earnings here in about 2 weeks as well. Yeah. So you got that in play.
Twitter.
All right, guys, let's play it. Let's play the judge this game, and let's go through some of these upgrade downgrades. I'm going to get all the coaches' takes here. Emily, Mark, and Matt. We'll go through it. Let's start with Bed Bath and Beyond, BBBY. Been catching the attention of some traders. Actually got the double downgrade today. UBS downgraded it to sell from neutral, and Raymond James, BBBY. Raymond James downgraded it to market perform from a strong
I wonder
buy.
if Wall Street Bets tracks Wall Street upgrade downgrades.
Double downgrade. The stock is up 15%. So
this is the battle that's playing out, though. This is Wall Street fighting back. They're going to downgrade aggressively every one of these stocks that fit the Wall Street Bets mentality.
Yeah, no, it is. I mean, and from a fundamental standpoint, they're correct. Prices
they're not wrong.
Valuation. But normally when you get a double downgrade, the stock at least goes down a few percent, right? But this is the short battle going on in the market right now. Heavily shorted stocks. Bed Bath & Beyond is a heavily shorted stock, and they're getting targeted right now.
Yeah, I think you're going to see aggressive downgrades by many firms in Wall Street targeting these stocks that Wall Street Bet gets that social conscience behind. It's a battle happening in 5% of the market, one that I honestly don't care to participate in.
Yeah. Double downgrade up 15% still is crazy to me. I know it's
call me old fashioned, but I'll still take a Microsoft over a GameStop.
Yep. Next one here is Etsy, the aforementioned one that Elon tweeted about. Got a little attention also from Jeffries today. And Emily, I'm going to ask you first. They raised the price target to $245 from 205. Obviously, they had that target. It got met and exceeded, and they're upping it again. This is what these Wall Street firms do. Do you agree? Etsy, $245 price target.
Well, I agree with the upgrade, yeah, because they had it at what, 205 prior, and it's sitting at 226, so moving it up to 240, I can agree with that. And I mean, now that it's, in everybody else's radar because of, Elon's tweet, who knows what this thing can do, right?
Yeah. Elon tweet and a price upgrade.
What was the price target?
245.
Yeah, I agree with them. I agree with the price target. I mean, you don't love the action today, but that's not what a price target upgrade is, so we're not going to talk about that. But when you're looking at just pure trend and pattern here, strong trend, it does have a little bit of decreasing momentum. Average yield is about $48 in the pattern. If you take that from the base of support, you're looking at an average price target right there at about 240, 200. We'll call it 250-ish. So 245 seems okay. In a slowing momentum environment, 245 seems okay.
Mark, I'm going to start with you on the next one. Dollar General, obviously the consumer, products company, retail company here. They were upgraded at Loop to a buy from a hold. Now, this has been in a long consolidation, sitting near support within shouting distance of the 200 period SMA. Mark, do you agree?
It was what, and it went to what?
It was a hold, and now it's a buy. So it was a hold, now it was a buy. Marky, do you agree or disagree? Dollar General is a buy.
Listen, consumer staples isn't hot right now, but that's not what they go in. I mean, this is a company that consistently makes money. It's a great company. It really is. I mean, when you look at the long-term trend, it's one of the prettier ones out there. Yes, it's only had the audacity to go up about 150% in 2 years. I know we want that in one day, right? Pretty long-term trend, a little bit out of favor in the short term because of just, money flows and such. I like it. Listen, I love their fundamentals. You could do a lot worse from a long-term position trading. Now, if you're going to trade it, you got to wait for a signal, right? But as far as the upgrade, I like it.
Yeah, but that upgrade's a buy hold upgrade. That's not a price target upgrade. That's a legitimate acquisition upgrade.
So, I would wait for a signal before I did anything, which you're not going to get anytime soon. But
Yeah, I'm not sure I agree with the upgrade on Dollar General here. It's an area of the market that's falling out of flavor with the market. You're also talking about a stock that's underperformed other stocks within its sector. Take a look at Big Lots for a second, BIG. Oh, I'm saying take a look like I'm not the one running the show here. Take a look at Big Lots here. You know, same type of channel. What's the difference? One sitting at support and the other one sitting at resistance, right? Relative strength. You'll take Big Lots. When you're taking a look at BG here, BG, same type of thing. Whereas, you know, Dollar General's all the way down the channel, BJ's really kind of recovered at the top end of the channel. If you're looking at buying the lows in some of these companies, wouldn't you rather take a Costco over a Big Lots? I mean, I probably would. So if I'm looking, unless I'm upgrading this sector, I'm not going to upgrade Dollar General over 5 or 6 of the stocks within the sector. In fact, when I'm looking at ODG here, Dollar General, I'm looking at a company that's clinging on to the lifeblood of support and hope. If it violates the 200-day moving average, doesn't get annihilated. I think you're a little premature on that upgrade there. Fundamentally, I mean, there's really no difference fundamentally between a Dollar General and other areas of this market. I mean, if you're going to take the safety play, you take a Walmart over a Dollar General right now. If you're going to take the growth play in this market, you're going to take Target over Dollar General right now as well. And so, you know, from a trading perspective, you're probably looking at Target. From an investing perspective, you're looking at Costco, or you're looking at Walmart here. From a trading perspective, I would also say PSMT is in a much better environment with a little bit of a flag-based pattern with the confirmation above 100. That's also post earnings. So, no, I would disagree with Dollar Generals. I think there's better areas in this space for a traditional upgrade, such as Target, such as Walmart. I think there's better momentum trades out there that are trending, like PSMT above 100 or the bid locks breakout of 50. That would be 55. So I just think there's a lot better areas. So unless you're upgrading the entire sector and putting Dollar General into sector perform, I disagree with the upgrade.
Mm-hmm, mm-hmm. Next one, we're going to go to Bank of America, and Emily, I got to start with you with OBAC. I'm guessing I know the answer to this one, but I'm gonna throw you a softball anyway. Atlantic Equities upgraded Bank of America to overweight from neutral, which is essentially the buy rating. They like it.
That's where Emily's been since 2015 on Bank of America, overweight. Like, that's what she's done. Like, Bank of America is like, yes. Does she disagree? No, I would love it if Em was like, downgrade it now, just so I can acquire more. Be Wall Street, Em. Downgrade it so you can acquire more. Go Jamie Dimon.
Not my baby.
Yeah.
So,
not your thing?
Do you agree? I didn't get verbal confirmation here, so I would like.
I 100% agree.
Yeah. Marky, what about you? Bank of America, one of the better finance banks?
Listen, I'm looking to take a stake in somewhere financial as soon as momentum evens out and I get a trading signal. You know, like the reflation trade and some of the hotter areas of the market have cooled off. Looking for a setup here now. Maybe Emily can talk me into Bank of America versus something else. But I'm taking a wait and see. I want to see momentum stop. I want to see a trading signal here. I want to see the sentiment, right? Because everyone was so gung-ho for financing. You could hear it in the chatter and you could hear it in the speculation. I want to see that sentiment pick back up before I dive my toes in.
So you're a take your pick out of the sector, find your best setup kind of situation. Obviously, this is one, Emily, you've been cash flowing on for years and years and years, right?
In the retracements on these dip mechanics that we've really seen after earnings started with, Goldman and Bank of America, JP Morgan, you saw a very similar type of price performance out of all of them. And so when you're looking at this industry specifically, and it would be banks diversified, you're going to get some mid-level stocks, some regional banks there. Your big dogs there are the Citibanks, the Bank of Americas, the JP Morgan Chase, the TD Bank, UBS, and some of those. But when you're looking at some of these, like buy the dip mechanics, I mean, honestly, Chucky, I think you got to make a decision, because I don't think you're going to get that much bigger of a dip than you're getting here today on Bank of America. I think it's getting into that zone where yeah, it's fallen out of flavor because the stock's down 10%, and all that the message boards you follow are all Momo chasing dragons and dreams out there. So, yeah, it's going to fall out of flavor. It's not up on the day. But here's Bank of America quietly in a great bullish uptrend with momentum that posted a very positive earnings report. We saw JP Morgan, we saw, Citibank also post very positive earnings reports as well. They're all doing very similar things. So I think if you're going to be looking at a diversified bank like a large cap Bank of America, a Citibank, or a JP Morgan, those would be the three I would be looking from. Bank of America, again, let's take a look at that chart. Momentum hovering above the 50-day moving average. Obviously, the violation of the 20 and the 9 is a little concerning. Citigroup here, same thing, violation of the 9 and the 20, violating the support level, fighting for 60, right where the 50-day moving average is. JP Morgan, similar to what you're seeing in Bank of America. For me, if you're looking at picking it up from a position cash flow perspective, I think Bank of America is the pick, and it's the only pick of these three. If you're looking at trading here, JP Morgan looks like it's setting up pretty clean with the 130 potential support bounce. So I'm looking at Bank of America, but I always look at Bank of America from a cash flow perspective. JP Morgan looks like it's setting up in a traditional bullish retracement with support at 130 starting to form here. So
I think there could be a really good trade set up here in finance on some of these different charts in the coming days. You just got to wait for the signal.
Well, you're kind of seeing the same thing in the broad sector. So stocks that look worse than this, you should stay away from, and that's why you're looking at, again, big money center diversified banks like Bank of America, Citigroup, and JP Morgan. They're all forming something similar to this. I'd be looking at JP. I'd be looking at Bank of America and probably leave Citigroup, away from here. If you're looking at a little bit more lower cap type stocks that could be also fairly good in this space, WBK is setting up from a momentum perspective. It's a little bit of a gapper, smaller bank, obviously. I don't even know the market cap off the top of my head. Let me hurry and look it up. It's much bigger than I thought. I thought we were like a $20-30 billion bank. We're 61.8. Everything's a $70 billion company apparently in 2021.
Banks make money.
Like they just make money. But you're talking about, a WBK here. It's an Australian bank. That's why I wasn't as familiar with it. Cheap stock, hovering right south of a high base type Canada. Watch that 9 EMA. And so if you're looking at this space, once again, you got Bank of America on a dip. You can look for cash flow strategies. You got JP Morgan, that big diversified money center bank that's setting up in a traditional bullish retracement, and this WBK area of the Australian bank setting up in a high base momentum trigger with the Alpha 9 pattern. So I do think you got your pick here.
I remember this video. This company actually reminded me of a video I saw once. So I was like looking at different Australian securities. I can't even remember why, but I went to it was either Westpac. Australia has just a couple really big banks. I think there are 4 big banks in Australia, and it was on one of the company's websites, and they had this paid person being like, "Yeah, when I invest, investing diversification is very important." And I wish I had an Australian accent so I could give this credit because it was so funny. I laughed for like the whole rest of the day. The person's like, when I diversify, I don't like to just buy one of the banks. I like to diversify by buying all of the banks. And I was like, yep, that's diversification, right?
Just buy everything. Now you're diversified.
Buy all the banks. Now you're diversified.
Of course. By the way, Queen, you just picked up. We got a brand new member in our chat here. Big shout out to My Turn. He says, I just found this group very interesting. And it's welcome. Great to have you here, My Turn. We always welcome beginners, newbies. Come and join the conversation. We have just a couple really, really basic rules. Participate, have fun, zero negativity. That's it.
And My Turn, very quickly, we're not one of those companies that's just going to, hype the next great day trade and pick that people can go get rich quick on. We're an education company. We believe in education. We teach, we apply. So Tackle Trading is a community of like-minded traders and investors navigating the market together. Specifically in the halftime report, we like to break down the market activity, the major news of the day, earnings reports, get our community up to speed on what's happening in the market today. Obviously, we have other products that help people understand trades and education and everything, but our community is an amazing community, and they're all here to help. So let's give My Turn a big welcome, guys. Community, welcome My Turn to the halftime report. Big shout out, brother. Thanks for coming.
Got a couple of quick other ones here, guys, on upgrade, downgrade. Let's judge them. Let's see if we agree. Implied materials caught an upgrade here today from D.A. Davidson. Not a couple of different things on this one. Matt, and Matt, I'm going to start with you on this. He went to buy from neutral.
I would blindly upgrade applied materials in any environment, in any scenario. So I agree if it's an upgrade.
Yeah, I thought you might. I had a feeling you might agree with this one.
How many times do I have to call this my second favorite play in semiconductors in any capacity?
Mm-hmm.
I don't know why applied materials doesn't get the love that AMD gets from a trading perspective. It's a better tradable instrument than even AMD is.
The only question I'd have for this an analyst is if you had applied materials on your watch list and you've been actually tracking this for a while, which is this not a new coverage, how come you had it neutral for the last 6 months?
Yeah,
that would be my question.
Like, why are you not fired yet?
Right, like this seems really
applied
late.
Materials has been on the tackle 25 for 5 consecutive years, and I refuse to bring it off in the face of anything. What are you doing? This is one of the most fundamentally gifted companies in the entire space. The first time I looked at applied materials from a fundamental perspective, my jaw dropped and I fell in love, and I have not broken that first love since. That individual needs to be fired. What are we doing? Applied material is beautiful. By the way, the breakout of 110 looks like it's setting up as a really good swing trade, but you do have earnings coming up real tight.
I agree.
You got time, but it's got to break this week.
Last one, and we might have a difference of opinion on this last
one. Who disagrees on the upgrade of applied materials?
Anybody?
I want to fight that individual.
Well, now they're not going to.
I will meet you
Emily
in the
might have had a
lot.
real strong take. It's like, okay.
Not anymore.
It's like calling my daughter ugly. Those are fighting words. What do you mean you had to upgrade my daughter? She was an upgrade at birth. What are we doing?
Just in case this comes up later when we have us I agree with Matt. Unlike the other people thought I did not agree with you with AMD, but it's okay. We shall not have this discussion.
Listen, we don't need to debate the Tesla, AMD, and the Activision example from the scouting report vetoes.
No,
I will remember, and I will hashtag never forget.
Matthew, justice.
Last one, DraftKings, bring it up. Popular company.
Okay, can you just stay on here real quick? Just that chart real quick. Because hot area of the market took some time off, fell below the 20, consolidated. I would love to see finance do this pattern. Something similar to what it did about, what was that, 3 weeks ago, 3.5 weeks ago. If it does that, I'm going to be trading finance. I mean, things don't run up every day. Sometimes they take breathers. Give me a pattern like that on finance.
So you're still on our finational conversation.
So,
okay. We all have our time frames when we get there.
So
some people go 55 miles an hour, and some people go 65, and then Emily goes 95.
Different styles of people looking at charts, no doubt about it. But the fact that your eyes didn't instantly go towards the high.
How did you not instantly see that beautiful high base breakout?
Because I'm not trading that. I'm looking at this pattern, trying to visualize what finance will look like in 2 or 3 days.
I get it. Mark's like, I am only dip mechanic, and I will not even look to the right side of the chart.
I'm going to start with Mark on this next one because I actually think he's got an opinion on this stock quite a bit. DraftKings, last one here. Goldman Sachs, one of the finance companies you've been watching, Mark, obviously a firm here, upgraded DraftKings to a buy from neutral. Do you agree that DKNG should have a buy rating here?
I love the space, right? Listen, we've been talking, all of us, for 9 months now on online, the online betting environment long term. So you love the space. If you want to pay a high price, I get it. I'm just going to be greedy on it, but I'll support it, right?
Let's get a chart on this one here. DKNG, Matt, if you can.
Oh, yeah.
Sorry.
I mean, I do love the space, and it's one of those spaces I believe in. If you want to pay a little bit higher price, I'm still not going to pay this price, But if you want to pay a higher price and be willing to and do your thing, I mean, I just love the space so much. Online betting, sports betting, it is going to get into state after state after state after state. It is the way sports
Sounds like
betting
you
going to
disagree.
be. What?
Sounds like you disagree. So you love the space, but you don't love DKNG enough to call it a buy here. Is that what I'm hearing? Because I'm hearing elevated levels and all that.
I'm torn because are you paying a premium for that future? Yeah, but that's been rewarded for years now. Paying a premium for the future, paying a premium now for the future. That's been rewarded. And if it breaks out of there, if it breaks out of that range, could have some juice. And there's endless strings of things. So I'm really hesitating here because I hate the valuation. But man, this thing could run with the string of headlines. So I get the buy.
I need the Judge Judy gavel, Mark. I don't need this isn't a segment on the fence. We need a strong gavel on the table. Agree, disagree. Marcus,
I don't have a strong opinion on it.
I need a panel of judges coming in here. Emily,
how
about you?
I agree. I don't trade DraftKings. I don't hold it. I don't have anything on it, but I definitely agree with, especially if it breaks out of that, what is it, 55?
Mm-hmm. Mm-hmm.
Yeah, I would definitely agree.
Matt?
What was the rating?
Buy.
And they did what?
From neutral to buy, upgrade. It's a stock they've had coverage on.
I got no problem with an upgrade from neutral to buy here. Trend's fine. I mean, pattern's fine. You believe in the company, you're going to have it as a buy ranking. If you believe in the movement, you're going to have it as a buy ranking. And I think most of the time, most people are going to have a buy rating on DraftKings about 80-85% of the time. So I don't have a problem with the buy rating. It wouldn't be the company I'd be looking at this space in the short term. When you're looking at Penn National, and I know this is financial shell company, but obviously that's just kind of where we categorize it. Penn National Gaming, better trend, better pattern, little volatility today. Would like to see that shake out, but a 111 breakout there. But I'm still looking at CZR and quite frankly, the $80 breakout on CZR seems pretty legitimate there. You also have the one we looked at earlier this week that has not broken out yet. It might have been actually late last week when we were looking at in the halftime report, but Boyd Gaming here, you're coming up on earnings and on the 12th, you need it to break out fairly soon, but the $50 breakout here on Boyd, I'd rather take. Caesars, the $80 breakout, you do have some earnings here to be a little bit concerned about. I'd probably still do MGM more than take the risk on a DraftKings. So I like the price action on Boyd and Caesars, and quite frankly, probably even Penn from a trend perspective a little bit more than DraftKings. But I think you got to have this industry as a buy. And if this industry is a buy, I do believe you have to have DraftKings as a buy as well.
Mm-hmm. Yeah, I agree with the analysis there. And from a trade standpoint as well, some of these better trends are definitely intact.
Simply because you might prefer something else in the space doesn't mean the space isn't going to carry everything up.
Mm-hmm.
Right. Mm-hmm. And so DraftKings isn't my cup of tea here. I don't like the consistency in movement, and obviously fundamentals. We're talking about valuations that are still through the roof here. So I think this has to be a sector and an industry movement if you're going to upgrade DraftKings. But I do like other players in this space a little bit better on the short term.
Gotcha. All right, guys, that's what I've got from my side here. Fun show. We got through a lot of content here and obviously gave people a lot of important information, especially on the earnings announcement. Tomorrow, we're going to be analyzing.
Somehow we got an hour and a half of content out of a doji.
I know.
Proud.
Doji. But we had a lot of fun here. Let's get final thoughts. Let's move around the room. Emily, you're our guest here today. You first.
Final thoughts this Friday, ladies of tackle trading or not tackle trading, pretty much all the ladies that are listening to this will get to watch this later. Have our Women in Trading webinar on Friday night at 8:30 p.m. Eastern time. So
I got Beyonce in my head right now.
What?
All the single ladies.
All the single ladies. All the single.
If you can sing it.
Actually, Mark.
I can't.
I will Uber and Eats a steak to your house right now if you sing the single ladies.
Oh, wait. Hold on.
Wait a minute. First of all, it's not all single ladies. It's all trading ladies. So, Mark, I need a song. Please, I beg. All the trading ladies.
All the trading ladies. All right.
All the trading ladies. All the trading ladies.
I will.
That's kinda how it goes.
I will pen you a song.
All the trading ladies.
I'll have it for you next week.
That would be fantastic. Friday
I like
night,
my
8:30.
market up. I like it up.
Do I still get a steak dinner?
Bro, no.
Yes, yeah.
If you get me that, I will buy you
Listen,
McRib.
that's a terrible song to sing. Can't
Listen,
you get
I
me some
will
Johnny
buy you
Cash and some country gold? Like all the trading ladies from
Oh,
Beyonce.
and I'm gonna
yeah.
get Janet Yellen in there. I'm gonna get Nancy Pelosi in there because did you know that Nancy
all
Pelosi and her
all the trading
husband?
ladies.
You see why Nancy Pelosi in a trading song? She bought $1 million worth of out of the money call options in December
On
Tesla,
GameStop?
on Tesla,
Fantastic.
on some other things. So
Fantastic. Nancy Pelosi
there's a Nancy
joining
there
the Wall
dropping
Street
a
bets.
mill on out of the money
Breaking
options.
news. Nancy Pelosi joins Reddit thread. Wall Street bets. Out of the money call options on GameStop. You heard it here first. Mark
Yeah,
Justice, Tackle Trading.
Mark, final thoughts from you.
Listen, this market, eventually there's going to be some macro thing that gets us going. Until you just rinse and repeat your system and you do it responsibly.
Maddie?
My final thoughts are we had an awesome time on the podcast yesterday. Guys, Trading Justice 409 in the books, understanding earnings. Go to tradingjustice.com. You can catch the podcast on any podcasting app. I use Podcruncher. A lot of people use iTunes, but literally any Android or iOS app that is podcast, you can download, subscribe. You can get it on Stitcher, iTunes. You get it on the Google Play. A lot of things to get an podcast these days. But we had a great time talking about earnings yesterday, and so obviously it's earnings season right now. We the feature was planned around earnings, but we talked earnings in the market skyline. We talked a lot of earnings in the feature. We talked about the definition of earnings, why it's important. And so if you ever want to know more about earnings, what to look at in earnings, how investors answer the question on how to handle earnings, I thought we had a great conversation on that in the podcast. So if you do enjoy it, make sure you download, give it a nice little listen. And obviously, if you love the podcast, the best way, and the podcast is produced by Tackle Trading. So the best way to support the podcast, if you enjoy it, give us a 5-star review on iTunes. Honestly, guys, nobody like Tackle Trade. We don't like begging for likes and reviews, but the simple reality is we got to compete with other people who are begging for likes and reviews. So give us a 5-star rating on iTunes. That helps us really get that message of the Trading Justice podcast out there a little bit more. And if you don't love the podcast, we still appreciate you. We love you, and we appreciate that 5-star review anyways. So y'all have a great day, and we'll see you again tomorrow. Same time, same channel.
Same time, same channel. By the way, one last thought. That was a good ending, but I did see Kinley saying something here, and I appreciate it. Kinley's given some of our beginners some advice. Check out the trials. I downloaded the journals 2 years ago with the 15-day trial, and I've been glued to the group since then. And I think that's
like
really cool to hear. Yeah, I mean, get some value. Come try the trial. I just dropped a link to our 15-day membership.
If you are new, you will not get a better value because you'll find companies that will do picks. You'll find companies that will promote picks. You will not find a company that will value education, bringing everybody up like Tackle Trading will.
That's
we
right.
do the education. We even when we're analyzing, we teach in everything we analyze. We try to go into detail to make sure everybody understands so that you can make decisions that is for you, that's in the best interest of you. Get the education, get help with the application, stay with Tackle Trading long term. I promise you it'll be worth the investment in your time and your money. Have a good day.